Good evening, everyone. Time for another silver update. This is the daily chart, one we've been looking at the most recently, and we're still in an uptrend according to this trend line. I've drawn another trend line for the MACD that kind of corresponds to these points. You can see we have a pretty serious divergence between these lines. The MACD is trending down while the price is still trending up. Make of that what you will. It seems to indicate to me that the market is managing to reach oversold conditions without significant corrections in price, which is a healthy thing. As I said before, the MACD on the daily normally will always come back to the zero line. It's just a matter of time before it does. If we look in the past, our biggest period below the zero line was the 2008 bottom that we put in at about $8.50 to $9. You can see that we were below the zero line 1, 2, 3, 4 months, roughly 4.5 maybe or so. Other than that, every other time we've been below the zero line, we've come back up in roughly a month here and here. We do have a 2-month period here where we were below the line. So if you look at where we are now, we've now spent about a month, not quite a month or so, below the zero line. So if we match something like this time and we go 4 months, that's going to be sometime around fall that we cross up above the line and begin to rise. That doesn't correspond with making new highs, at least historically, but so that's just if we correspond to this past move, and there's no guarantee that we will. So the market looks strong still. It's still above its line. It had a massive move out, and I've always drawn this trend channel to try to show how it is within the channel. We're about halfway up, about a third to halfway up, so we're still moving within the channel. We're still making higher lows, so we're still climbing. Overall, pretty bullish. I wanted to take this opportunity to look and see how the physical market is doing, and my favorite mint, of course, or I'm sorry, my favorite distributor is Gainesville Coins. So I've done a listing of all the 1 ounce, and we'll just scroll through them real quick to see where we're at, just a kind of overview. The first one here, this is a generic round I haven't seen before, but it's out of stock. So it looks like it's a stock photo, so basically just any generic 1 ounce silver bars. And here's a generic 1 ounce round, and it's $38.71, so that's decent. That's about $2 over spot, so that's a pretty good, at the price we're at, that's a pretty good amount over spot. Just a $2 markup, but that's a sunshine round. The monster boxes aren't shipping out till June 24th, and same with the rolls. The Made in USA bars, looks like they're available, and that looks like just a little bit over $1 over spot, so this is going to be one of the best deals here. Looks like a lot of what's left is just the generic type stuff. We've got the random date Silver Eagles are sold out, and the 2011 are not shipping out till the 24th. Then we've got some numismatics. There's the Buffalo rounds, look like they have those in stock. That's a pretty good deal, a little over $1 over spot. Same thing with more generic rounds. And then we've got more numismatics. Not a lot of the Perth products left. The boxes of the koalas that are coming in the 8th of July, and they're about $40. The rest of these Perth looks like they have quite a bit of premium to them, so I would probably recommend this box if you're willing to wait. It looks like this box of koalas is probably the best deal on here I've seen so far. The kookaburras are pretty expensive. That's about $9 over spot. The rabbits, I don't like those, and they're ridiculously high. There's the koalas again, and the mouse is an older one, and then we just have these strange colored coins. And we've got some Philharmonics. Looks like they're roughly $40. They're in stock. And there's the singles. Looks like the Maple Leafs are running about $40 or so as well. They're not shipping till the 24th of June. And the Grizzlies here are $42.20. That's about a $6 or $7 premium, $6 premium. That's a little high, but it's a wonderful coin. That would probably be my second recommendation of these. There's the pandas, and there's a Mexican coin, and then we have the Fiji Takus. It doesn't look like they have the 1 ounces anymore, so they have the 5 ounces. So pretty tight situation as far as the physical goes. It's a lot tighter than it was before we made that top and fell back down. So it looks like the buying is still strong in the physical market, and I wanted to use that to segue over to the latest Jason Hommel article. I'm going to go ahead and read that to you because it's pretty good. Jason is really down-to-earth guy, and he really understands the fundamentals and what's going on with silver, especially physical. So let me read this to you. It's called Basic Info on Silver, and Jason says, "What is the Federal Reserve, and why do some say we should use constitutional money such as silver and gold? I'm hearing that most Americans, even the Tea Party, don't know who the Fed is or why we need to use silver and gold as money. This article is for them. If you have USA paper money in your wallet, or if you have money in the bank, then you are being ripped off. Paper money in the USA used to be called silver certificates as recently as 1964, which was 47 years ago. They were called silver certificates because each note stated this certificate that there has been deposited in the Treasury of the United States of America number of silver dollars payable to the bearer on demand. This turned out to be a great big lie. It was fraud. Current paper money is the evidence of the theft. I used to call paper money an unjust weight and measure, but paper money today is no weight and measure of anything at all. It's a broken promise to pay a devalued amount and an unjust weight of silver. Who cares? Well, you used to be able to get a silver dollar coin for a paper silver certificate. They were equal in value, as one was a promise to deliver the silver. Today, the price of that same silver dollar coin containing 0.76 ounces of silver costs about $30 from a coin dealer, with the silver price at $36 an ounce. The paper money buys much less silver. It buys less gas. It buys less of everything today compared with prices in 1964, and about 99% less of everything than 100 years ago in 1911. The Federal Reserve was created in 1913. They got a 100-year charter that expires in 2012. Congressmen and Tea Party activists ought to seriously reconsider the Fed's charter very carefully right now. Right after 1913, the USA had funding to fight in World War I, and then suffered the false bubble economy of the Roaring '20s bull market in stocks, which, when it popped, led to the Great Depression in the 1930s, followed by World War II in the 1940s. After World War II, the U.S. paper dollar became the world reserve currency, which helped to effectively loot the productivity of the rest of the world. Well, we did win World War, and the world became the spoils of the war. the rest of the world's central banks began accumulating paper dollars instead of gold. This theft of the world's assets was both good and bad for the USA. Good because the USA can simply print the money to send to the other nations in return for real assets such as oil, machines, food, clothing, or whatever. But it's bad because our nation got addicted to the benefits of the false and inflated values of free paper money and grew lazy, and we forgot that the benefits and bounty of freedom are greater than the benefits of a free lunch paid for by slaves. Today we are still free to go into the market and buy physical silver, and let me tell of this wonderful opportunity in silver. To create this paper money world in which we live, the world's bankers launched a propaganda and education war against silver first and then gold to prevent their use as money. This war dates back to the late 1860s. They succeeded, as no nation on earth uses silver as money. Reduced monetary demand has reduced the value for silver, making it an attractive and cheap investment. Then, by the end of World War II, the age of electronics began, and the use of silver as a conductor of electricity in all sorts of electrical devices simply exploded, about 10 times as much as previously. Modern nations use about 3/4 of an ounce of silver per person per year in industrial applications. Today, world industry consumes about 600 million ounces of silver per year. Industry consumes nearly all of the world mine supply, leaving only recycled silver, only about 200 million ounces available for investment demand. This scarcity of silver makes it an even more attractive investment. The bankers of the world have not cornered the market on silver. The exact opposite has happened. They tried to make silver as cheap as possible by not buying it themselves and trying to divert investment demand away from the metal wherever and whenever they could. For example, anytime any of the clients of any of the major Western LBMA, London Bullion Market Association banks, wanted to buy silver, the banks said sure and opened up silver and gold accounts for their clients without going out to buy and store the actual metal. Yet they charged their clients storage fees. This created, according to the BIS, Bank of International Settlements, a gold and silver liability that is up to about $600 billion in gold and about $200 billion in silver. That's about 6 years worth of world mine annual gold production and about 10 years worth of annual production of silver. That's silver and gold that the major banks owe their clients and never bought in the real market to help suppress prices and prop up paper currency. Another way that banks suppress silver prices includes offering investment-grade silver-sized certificates, not paper money, as they do in Canada and Australia even today. But when they offer bullion accounts or certificates, those trade in a non-transparent way and they don't create price quotes, and it's difficult to find information on how much bullion fraud has taken place. The main way that banks manipulate the prices of silver and gold is through the futures markets that generate minute-by-minute price quotes that other industry players such as refiners and miners and large bullion wholesalers must look to in order to conduct business to buy and sell silver and gold. Futures markets are price manipulative and price suppressive because the sellers offer far more silver than they have, and they offer silver on the worst possible terms and conditions. They offer to sell up to 800 million ounces of silver on paper over a year when they only have about 300 million ounces of silver in their vaults ready for delivery. Why then do people buy paper silver? The lure of greed through leverage. You can put only about 10 to 15% of the money down to buy silver, and thus, if silver prices double, you can earn 1,000% on your investment instead of 100%. But what honest industrial participant needs silver a month or so from now for delivery at some vague time within a whopping 30-day time period and in the form of a bulky 1,000-ounce bar that is particularly difficult to ship by mail or even melt down? I won't even bother ordering any silver from any supplier who will take even 21 days to ship it out. I expect my suppliers to ship out silver the next day, like we do, or maybe at the most a week after I wire them the money. The modern way to keep people away from buying and taking delivery of real silver is to offer silver in the form of exchange-traded funds, or ETFs, such as the SLV, which can be bought and sold as easily as a share of stock in a company like Microsoft. Recently, it was pointed out that the modern forms of paper silver, such as the futures markets and ETFs, traded an entire year's worth of silver production in a single day. I don't think that would be possible unless there was a massive amount of fraud taking place, instead of any real delivery of real silver taking place. But that's just my opinion, of course. Real silver is real freedom. All forms of paper silver are like slavery. The paper virtually enslaves the promising party, the seller, to deliver and perform for the promised party, the buyer. But the promises are often broken, especially when entities promise to deliver many times more worth of gold and silver than flows in the world on an annual basis. The slavery is bad. Defrauding others is bad. But real silver creates freedom. A real understanding and commitment to own and trade real silver also destroys the power of governments to steal from the people through the Federal Reserve's monopoly power to print money, which devalues people's money. The paper money in your pocket, formerly silver certificates, is the best evidence and reminder that promises to deliver silver are always created to excess for the purpose of fraud. Think, what kind of business is it if you can take people's money and never have to deliver the underlying product? That's what banking is. And he goes on to point out his coin shop that he's got there. Buying silver is a rejection of paper money which destroys the Fed, destroys taxation, and destroys tyrannical governments. So, excellent summary and basics for those who are just starting, an understanding of why it's important to buy physical silver and why they're so intent upon diverting real demand, investment demand for real silver into fake paper silver, whether it be the SLV or the COMEX, or even, I would say, mining shares, which they control and suppress. So the only way to defeat the bankers is to buy the real physical silver, which is in a tremendous shortage right now. It can't at all meet the demand of, if the demand for the SLV and the demand for the certificates were actually to flow into real silver, you'd see a 10 to 100-fold move in the price, and it would be game over for the bankers. So you've got to understand the basics of why you're investing in physical silver, and I invite you to go ahead and read the rest of Jason's articles. They're listed on his site, and I'll go ahead and link that. So we're still climbing, and I think the picture is bullish. It may be near the end of the summer before we start to move towards new highs. I can't say for sure. I'm still projecting on the swing rule that we will reach $68 the next time we break out past this high and go into new highs. I think the move will be to 68, and we'll talk to you next time.